Happy Friday, everybody. This is Crypto and Coffee. I'm your host, Clutch Crypto, B. Wellington. As always, excited. He's already on the charts. And guys, hey, we called it the other day. It's still dropping. Let's see what we think it's going to do today and through the weekend. What you got, man?
Oh, well, so yeah, earlier in the week we knew with all the news announcements that we'd have some volatility, and here we are at 17, 50s after dropping. I mean, at the height of beginning of this week, where we're at, like 18s, higher 18s. I think we even touched 1900, and so, we've had this drop to the downside, similar to what we, projected on the shows. And so, and what we've been projecting for a while, this is USDT on the ETH. And so on the daily, and if you can see, we have kind of the support that's for, support. These three candles here, or these three drops here, have formed the support that most people are looking at. And so we're right there. If we begin to drop from this support, I mean, we're going to have, a long way down the God, hopefully people aren't scared by my line down here in the 600s, but it's always a possibility. It's something that we have to take in consideration. I've got another line here at 1474, and so I think we'll have some, probably, because once this drops, you're going to get a lot of people that are kind of it's going to be a buy the dip like you've never seen before, because a lot of the folks that have been involved kind of since, if you got involved in 2020, right, you haven't seen these kind of prices ever. And so when it drops below the 1750, what you're going to find is that people are probably going to be like, okay, now we're going to be buying at a discount, right? Like, that's the psychological mindset that people are in. And so, I think that's liquidity that's waiting to happen, but we may get a little pop here to take some more long liquidity, trap some more longs before it moves down and breaks this 1700. So that's what I'm expecting on that end. So that's
you're thinking we're going to see a bounce?
That's what I'm projecting, is that we see a little bit of a bounce, because we just have so many shorts that are out there, and I will tell you, it's a little bit of a conflicting data, so you gotta kind of take it with a grain of salt. I'm not going to ruin your high block statement, but I did take a look, and it doesn't look great for shorts.
Hey, man.
But in looking at funding rates, funding rates tend to be aren't totally negative. So people are buying this area, which would just tell me that we're probably going to bounce down into this area for a while. So let's just take a look at it on the hourly, just to kind of give a more shorter term perspective. So this line here was a vector candle that we came back and got this morning. We're also past the psychological low, on this particular indicator, which is Trader's Reality. Always give a shout out. And so we had this wick. We had talked about this wick coming back and getting it. We did come back and get that wick eventually, and so we do have some wicks down here. But this is the bottom of the range, right? And so conceivably, you can look at this as a couple different things. You can look at this as a head and shoulders, where you have the first shoulder, here's the head. If this doesn't penetrate this area, then this would be the shoulder to bring it back up. But, patterns are patterns, but liquidity is also liquidity. And we're not seeing a reaction. Like I said, there's conflicting data, but but I would imagine that we start to head back up, especially in the early part of the session, even if we end red by the end of the session. Fridays are always tricky, because you never know kind of what the objectives are, but we also know that we normally have volatility during this, from our standpoint, 8:30 to 9 o'clock, which is that New York futures open. And so here we got down to 1730s, and now here we are back in the 1760s. So this was a pump that we were talking about happening as we speak. We go to the 14-minute, same story. We came back here, recovered this vector candle, now moving back up. But again, with we got a lot of we have a lot of liquidity to the upside. We got daily open up top. We're below yesterday's low. We're kind of sitting around this low ADR, but we do have last week's low in here. So you want to be careful of that. And then if we do go up, we always look at the EMAs as kind of resistance. And so as we come up, we'll look to see if we bounce, if we have, some strong volume coming through these candles, great. Then we'll probably bust through. If not, we'll probably come back. But this is on the 14-minute. The 200 on the 1 hour is probably a better indicator. But then if we look at things like, kind of the sentiment indicator, we've got ETH funding rates, which are neutral to positive for most of the exchanges. But we do have some shorts that are out there. And then if we look at OI, 5.2 billion, so that's been growing. It's back over 5 billion. We were under 5 billion for a little bit, but as you can see, as we're dropping, OI has remained flat. So people are taking on positions, and if it's dropping, OI is flat. And where'd you go, Clutch?
I'm right here.
Okay, your camera went off.
Hold on.
Your foot unplug it or something. But if you got OI that's dropping, or if you've got price that's dropping, OI is flat, then most likely you got people that are buying the dip. Especially if you've got funding rates on a neutral to positive basis pretty much across the line. Dow's, the stock market just opened, so we are bleeding to the downside a little bit. 182 points on the Dow, NASDAQ at 194. We've had several CEOs come out and provide some warnings about what's happening in the economy. So there's a lot of bad news out there, which is another reason why I think that we'll pop a little bit to take advantage of folks that are selling off. But I think we'll see. Oil's still at 117.25. Gold is pretty much flat. Of course, on here they've got BTC USD bleeding down at 2.46. So everything's in the red at this point, but it's early. It's a Friday though, but it's early, and these numbers tend to reverse. Even you look at it now. We were at 225. Now we're pulling back up. So we'll see heading into the weekend. But there's a lot of negative news that's came out. There have been some positive news though. Non-farm payrolls came out at 390,000, above what was projected. So that's a positive thing, even though if you look at it from a period-to-period basis, we're on the downside. Unemployment rates basically remain flat. So labor participation is basically flat. We haven't, this news isn't great, but this news isn't like detrimental to the market. So I moved to the downside to take advantage of folks that see this as positive news. Whatever the news comes out and it's positive, expect a drop. If it comes out and it's negative, expect a pump. And because they're trying to trap traders that are trying to play the news or try to play the stats as normal stats. But we all know that this is not a normal market. So just do the opposite of what everybody else is doing, and you'll probably be doing great. So that's all I got. What do we got on High Block? What do we have on?
Well, you kind of already you already spilled the beans on the High Block. But could I get some permissions to share, sir?
Oh, okay. Oh, my bad. There you go. You got it now. You got it.
I got it. You're damn right. I got it. Okay, cool. Let me slide this over here. Oh shit. I hate it when I do this. Okay. Alright, okay. Cool. Here we go. Alright, this is High Block Capital. Can you see it?
Yeah, I can see it.
Okay, so as Baby Wellington mentioned, there are a ton of shorts. Negative 6 billion. So there's a ton of shorts that are out there. So what should happen is that we do a reversal, head to the upside, these this a short liquidation delta is not going to take long. This indifference here is not going to take long at all to go to the green. People like to get on board, and they like to get on board very quickly. So do expect a reversal. I think we're looking at some stuff here on Bookmap. I'm going to show you in a minute. I think we're going to revisit and retest this area, low area that we just came from in the low 1700s. But again, I also expect a bounce once we get back down into that range to continue up to the upside, just so we can shake these guys out. How high is that going to go? Well, pay attention once we get to 1835. We break out of that and keep moving upward. Be paying attention to the 1950s and, of course, up here at 2000. We do have a short liquidation that is pretty massive right here at 2030. And yes, I know I've been calling it for weeks. 26, golly, it's 26 something now. Is a CME gap that hasn't been closed in, I believe, 3 weeks now. So that's still out there on the boards to get. Do we pump up there first before we can see this big drop that we were talking about? Zooming out on the 1 hour, well, B. Wellington had it all up. This area that we've come and touched, do we come back up here in range first before we go back down, or do we continue with the downside? I think we're going to see some ranging, some consolidation, some more traps before we do what we're going to call the final plunge. That's going to be the name of it, the final plunge.
Like a toilet when you plunge in the toilet, the final.
Yeah, the final one before you get that motherfucker just cleansed and ready to go again. So, as you can see, right now this is Bookmap with USDT. As you can see, what happened was we came up here and we ranged right up here in the 1770 area. We got rejected. We're working our way back down into this range. What we're going to want to see is that these orders get filled in these low node areas, and we're also going to want to make sure that we maintain support and get a bounce to confirm what I was just telling you guys is going to happen. So just so we can get some good confirmation on that. So right now there's long-term liquidity though. Let's zoom out here. Let's really zoom out and see where our long-term players are, because that's usually going to be a really good kind of key indicator of the direction that we're wanting to head to. So 1700, as you can see, look guys, there's a lot of orders that stacked up here, long-term liquidity at 1700. There's a cluster of 8,300 orders down here. This is going to take a lot to get through. But they absolutely can get through it if they want to. I'm trying to look for some stuff that's a little bit further south to see. Okay, we still have the same long-term liquidity that we've been looking at all week, guys. That's still down here around this 1,200 to 1,000 range. So pay close attention when we get down there. Maybe that's where we're going before we get a relief bounce. Right now, the big play is what happens when we get back down into the 1700 area, because that right now that looks like where we're heading. So just pay real close attention to which way we bounce off of that. But this guy right here, I'm pretty comfortable in saying this is where we're headed. So we are headed to the downside in the short term. But again, I don't think that I think this support will hold and that we'll be getting a bounce from it. To see some higher prices over the weekend. Again, and then retail controls the weekend, and so I would expect them trying to get something positive, some type of positive movement going up, get OI and retail heavily involved in going long, to set the trap up essentially. That's kind of what I think. That's kind of how I think it's going to play out.
Well, I'm ready for the big plunge. To give some buying opportunities longer term for those that are ready for it. But yeah, I like the term, the big plunge. We'll be waiting on it. And so, trading is funny. It could not happen. But come on, probability says that it will. But it's gotta create. We've got to get another run going to get some momentum, to get people committed to the charts. Before that big plunge happens. So, kind of, we already had a a first reaction to this downside move from all time highs. We really only had one major move to the upside. You always expect two or three moves in order to build that liquidity. So we'll see how all that goes, and see how the strategy of these institutions play out. But definitely, be careful out there. We're at that support area. There's a lot of people that are committing trades. There's a lot of liquidity, but there's also a lot of people that are short. The other thing I'll mention, just so that we're not, you know, thinking that you're totally oblivious to some of these strategies, because there is a lot of spot traders that are out there that use perpetual futures for hedges, and so some of those shorts, could be hedging a spot position, and so as far as and that could cause some stability in the market in order to hold that support. So there could be some other strategies that are out there that are at play from a liquidity standpoint. So the liquidity out there could be controlled hedges, and so we'll just have to take a look to see what that looks like, kind of over the longer term.
Very cool. So that's all we have for today. You guys have a good weekend. We'll be on Keaton's Corner on Sunday, and then
Nice.
we'll be back here same time, same place Monday morning. Until then.